today. So we will get started and I will go ahead and share my screen. So here we go. And if someone will just give me a thumbs up to let me know that they can see my screen and hear me okay. And there we go. Got it. Got a hand raised and a thumbs up. Perfect. All right. Well, what we're talking about today is a couple things. Realize we have an hour here, but we're going to go into local education agents, LEA level maintenance of equity reporting requirements. And so there's a few things that are different this year than last year, and I'll explain those things once we get to them. The requirements say that we have to compare 23 to 22, and those requirements haven't changed. But the way that we will do that will have changed just a little bit. So let's see, went too far down. So let's go back up to slide number 2. So maintenance of equity requirements. Anytime we get an inflow of funds from the federal government, federal funds, there's always some things that we have to do in order to show that we spent those funds in the correct manner. And maintenance of equity requirements is one of those things. You'll see that written as MO equity, capital M, capital O, and equity. And that is your maintenance of equity requirements. So any LEA that receives ARP ESSER funds must comply with the applicable MO equity requirements in 22 and 23. The way that I read that is after this year, those requirements will go away. That's what we're hoping. We will not have to report MO equity anymore after this year. But this year we're using 22 and 23 data for comparison, the same that we did last year at this time, but there are going to be a few differences. If you are a newly consolidated district, you must compare to the consolidating district's data. I don't think we've had too many this year, maybe 2 districts that consolidated, so that makes things a little bit easier. So the requirements, LEAs must maintain 2 types of equity. So remember that. And you must meet both types of equity if you are an LEA trying to meet maintenance of equity requirements. You must meet both types, and those 2 types are fiscal equity, and that is to determine an LEA does not disproportionately reduce state and local per pupil funding in high poverty schools. And then you must also meet staffing equity. And that is to demonstrate that an LEA does not disproportionately reduce the number of full-time equivalent, or FTE, staff per pupil in high poverty schools. Those are the tests. You must meet both of those tests in your maintenance of equity requirements. On June the 8th, USED put out some final requirements. So they published a notice of final requirements in the Federal Register that outlined the requirements for LEA level maintenance of equity for 22 and 23. And that's why I'm hoping that this is the last time we'll hopefully have to show that we've maintained equity for these ARP ESSER funds. So let's talk a little bit about fiscal equity. Maintenance of fiscal equity, an LEA may not, in 22 or 23, reduce combined state and local per pupil funding for any high poverty school by an amount that exceeds the total reduction, if any, of combined state and local per pupil funding for all schools in the LEA. So we're comparing all schools in the LEA to your high poverty schools. And I actually developed a template for that to make the calculation easier. And as a matter of fact, I just emailed that out this morning. So if you are at LEA, you received that this morning, and it hopefully will make that calculation a lot easier. And we'll see how that works in just a moment. You also have to meet staffing equity. So maintenance of staffing equity says that an LEA may not, in each of 22 or 23, reduce the number of FTE staff per pupil in any high poverty schools by an amount that exceeds the total reduction, if any, of FTE staff per pupil in all schools in the LEA. So again, we're comparing all schools in the LEA to those that are designated as high poverty schools. And keep in mind, in staffing equity is a little bit different than your fiscal equity, because in staffing equity, we're using FTEs from all funding sources rather than just state and local funding. Interesting, but that's the way that it is written. So you have two types of tests. You have a district-wide test or a grade span test that you can perform. So an LEA may determine fiscal equity compliance and staffing equity compliance by either one of those methods. So you actually have a choice of methods that you can determine whether or not you met maintenance of equity. You have to meet two tests, but you can determine whether or not you meet it by fiscal or staffing. You may determine which method, a district-wide determination or a grade span determination, that you meet fiscal equity or staffing equity by. So if you do not meet one, you may move on to the next and see if you meet in that test. So if you do not meet district-wide, you can move on to grade span and see if you meet grade span determination, or vice versa. Maintenance of equity exceptions. So these are important because in my recommendation, I say that I recommend that you should probably start with the exceptions, because if you meet any of the exceptions, and there are three listed here, and I'll tell you what the fourth one is. If you meet any of the exceptions, you do not have to move on to the calculator. So if an LEA has a total enrollment of less than 1,000 students, you are accepted. If you have 999 students enrolled in your LEA, then you do not have to complete any of the calculations. You do have to turn in an exceptions form, but you do not have to meet any of the calculations. If you operate a single school in the LEA, you do not have to go through the process of meeting maintenance of equity, but you do have to turn in a form. And if you serve all students within a grade span with a single school, in other words, if your district has one elementary, one middle, and one high school, then you are accepted from the maintenance of equity requirements. So those are your first three exceptions. Very important. So there's a certificate of exception. So if an LEA that falls under one of the first three exceptions they're automatically accepted from the local maintenance of equity requirements. You do not need to submit a certificate of exception if you fall under one of these three exceptions. You just turn in your form, the first page of that form, and say that you're accepted and the reason, and you're good to go. No certificate required. Now, there's an additional exception. It is called the aggregate reduction exception. So if an LEA did not have an aggregate reduction in combined state and local per pupil funding, this is one of the differences from last year. Actual expenditures from 23 compared to 22, you have demonstrated an exception from maintaining equity for that fiscal year. So if you go back in your memory and you had to do this exercise last year, you will remember that we compared 23 to 22 last year, but we did it at the same time last year. We did it in September last year. We began the process in September. We did not know our actual expenditures. We knew what we had budgeted. So we compared budget at that point in time. This year, we are required to compare actual expenditures from 23 compared to 22. If you have no aggregate reduction, the LEA did not meet one of the original three exceptions, and you can demonstrate it did not have an aggregate reduction in combined state and local per pupil funding, your actual expenditures this year in FY23 compared to FY22, then your LEA is accepted for that fiscal year. So if your 23 actual expenditures for state and local funding are greater than your 22 actual expenditures for state and local funding, then you are accepted. There's one difference in the first three exceptions, that you have to actually turn in an exceptions form. Last year, you compared the revenue budget. This year, you must compare actual state and local expenditures, not revenue. So keep that in mind. Use your most recent student count, your total state and local actual expenditures divided by your most recent count. FY23 is greater than 22. You are accepted from the requirements for 23. And hopefully that's the last time you'll have to do it. So go ahead, if you meet that exception, go ahead and send in your backup documentation and submit a certification of exception from the local maintenance of equity requirements to the SCDE only. Do not submit it to U.S. Department of Education. Submit it to us, and I'll give you that address and tell you how to submit it. And we will hold it on file, and you do not have to do anything further at that point in time. So, in order to determine if fiscal equity is maintained, let's talk about fiscal equity. You need to obtain your funding information, in this case, actual expenditures. Let's talk state and local. So we want to look at funds 100, which is your general fund, funds 300 through 399, and include any carryover funds, and 900 through 999, again, include any carryover funds, and consider your expenditures. What you want to do is exclude any capital outlay, which typically is function 500, which would mean 500 through 599, object 5XX, which again would be 500 through 599 in your object level. You would exclude debt service, which is usually your fund 400 through 499. Exclude any federal funds, usually 200, food service and Medicaid, and exclude any charitable contributions from private donors. I would say that that's usually in an LEA stored in your 800 funds, and exclude pupil activity, which you can have some pupil activity maybe over in a general fund or another funding source, but that would be denoted by function 27X, which would be 271, 272, 273, or fund 7XX. That would be 700 through 799. So exclude those expenditures included in those items. Again, fiscal equity, obtain funding information, your actual expenditures, consider functions 100 through 299, which is instruction and instructional support services. Consider 100 through 499, which is salaries through supplies. And you want to consider all school locations because we're maintaining equity and comparing your high poverty schools. So you would want to only consider your school locations in your calculation. So moving on to staffing equity. An LEA must maintain staffing equity in any high poverty schools. This includes all paid staff, instructional and non-instructional staff, and also consider your vacancies. If you've lost a teacher or lost a non-instructional staff member, and there's a vacancy there, consider that vacancy in your calculation. Also, you'll consider those hired by contract who perform school level services. Under contractual services, that would be an object level 3XX, which would be 300 through 399. So in your staffing equity, you would consider all those. It also includes staff who split their time between more than one school building in the LEA. So if a staff member works a 0.5 FTE over at the elementary and a 0.5 over at the high school, then you would consider that 0.5 at the elementary and the 0.5 at the high school. Again, consider staff and school locations. Anyone signed to a school location is who you want to pull in into your calculation. And again, as a reminder, for staffing equity, you want to consider all funding sources. This is unlike fiscal equity, which only considers state and local funding sources. Your compliance calculator due date. The state education agency, South Carolina Department of Education, has to publish applicable high poverty school data for 23 on our website by December the 31st. This means the compliance calculator from you all would be due to us by November the 30th, 2023. That gives me a month to put the information together and get it on our website. So you have some time yet. We're September. You have until November the 30th, 2023. And my belief is that most of you will meet the no aggregate reduction. If you don't meet one of the first three exceptions, you'll probably meet the no aggregate reduction. If not, the compliance calculator is pretty easy to do, and it's not that difficult. I probably won't take that much time. Again, December 31st, we have to publish applicable, which that means applicable did not meet an exception. So if you met one of the exceptions, we don't have to publish your data on our website. We have to publish LEA high poverty school data for 23 on our website. The per pupil amount of funding for each high poverty school in the LEA in 22 and 23 we have to publish. The per pupil amount of funding in the aggregate for all schools in the LEA on a district-wide basis or by grade span for 22 and 23. This all goes on our website. And a few more bullet points. The per pupil number of full-time equivalent, which is FTEs, staff for each high poverty school in the LEA for 22 and 23. And the per pupil number of FTE staff in the aggregate for all schools in the LEA on a district-wide basis or by grade span in 22 and 23. And then we have to post whether the LEA did not maintain equity for any high poverty schools in FY23. And just for note here, and for memory, I think last year when we compared budget data, I think we only had 3 people that actually had to do the calculator. Everyone else met one of the 3 exceptions or the no aggregate reduction exception. So I had to post 3 schools, and I would assume that it would be the same this year. So on the reporting template, again, you should have received it today. My recommendation is to complete the exceptions tab first. Don't go any further until you complete that exceptions tab. If one of the 4 exceptions is met, there's no need to complete the remainder of the reporting template. If one of the 4 exceptions is not met, begin the completion of the maintenance of equity reporting template. Start early just in case you have to complete it. All LEAs must submit the reporting template. So what that means is if you met one of the 4 exceptions, the exceptions tab is the only tab required. Just fill that out. The rest of it can remain blank. Send it back in. If the no aggregate reduction exception is met, the reporting template must be accompanied by the completed certificate of exception. And I believe that I emailed that out to you today. If not, I'll send that out to you. And what you would do is return all reporting templates to Daniel Haven by November the 30th, 2023. And his email address is listed there. It's dbhaven@ed.sc.gov. So continued instructions on the fiscal tab. Use actual expenditure data from 22 and the 22 fiscal tab in the updated reporting template. Once data is in the new template, you can sort the data on the 22 fiscal tab by your PIP divided by ADM and sort it from highest poverty percentage to lowest poverty percentage. And the reason for that is you're going to determine what a quartile is if you have to go that far. All schools in the LEA are reported on the fiscal tabs. So if you have 30 schools, then you have to report all 30 schools on the fiscal tabs. There are hidden rows. So if you need to unhide those rows, go ahead and do that. They're hidden just for ease and also to preserve formulas. If you need to unhide them, go ahead and unhide them. Just realize that there are some that are hidden rows. On the 23 tab, this is on the fiscal tab, enter the actual expenditure data for 23. Your actual expenditures are used from all sources of state and local funds. Use most recent ADM for each fiscal year, and use FTEs across all funds, including vacancies. And then again, sort by PIP, ADM from highest to lowest poverty percentage. That way you can choose your quartile. And on the staffing tab, you want to use your actual expenditure data from 22 in the 22 staffing tab. Sort staffing tabs by your grade span. And again, note there are hidden rows for easier viewing and to preserve the formulas. If you need to unhide those, go ahead and unhide those. For the 23 staffing tab, enter your actual expenditure data requested for 23. And note that the fiscal tabs and staffing tabs contain the same data. So the 23 fiscal data can be copied, pasted to the 23 staffing tab. And that's true for the 22 and 23 staffing tab as well. You can just copy paste that information and sort your staffing tabs by grade span. And some formula notes, your ADM by grade span, assure that the formula is adjusted to calculate schools in the appropriate grade span range. That's just a double check on your compliance tab. Make sure, go to your next tab over, make sure it's picking up what it is supposed to be picking up. And I also double check that once I get your calculator. Same thing for state and local funds by grade span. Assure the formula is adjusted to calculate schools in the appropriate grade span range. And your FTE by grade span. Assure that the formula is adjusted to calculate your schools in the appropriate grade span range. Just a quick double check on those things. On the compliance tab, you only need to list the schools in the quartile for each test. So your quartile is your top percentage of your schools. You don't need to list all your schools, just list your quartile. List an order of poverty percentage from highest to lowest in the year that you're testing, which is the most current year, which in our case would be FY23. Assure the formula compares school to school in each tab. And keep in mind that only one MET test each is required for fiscal equity and staffing equity. So as soon as you meet a positive for fiscal equity, you don't need to go any further. As soon as you meet a positive for staffing equity, you don't need to go any further on those tests either. So some other information, just note the information and follow instructions on each tab. I tried to be pretty concise with my instructions. Hopefully they're pretty clear. I've done this twice. I think the first year I built the calculator. I had to go through some growing pains and I learned some lessons for the second year, and I think I did a pretty good job on the second year. Note that there are hidden rows for easier viewing, and unhide those rows as necessary. Some transparency recommendations for your LEA. Just consider making publicly available on your website which schools are high poverty and demographic information for each compared to the entire local education agency. Consider your per pupil amount of funding for high poverty schools for 21, 22, and 23. You got some 21 data from your old calculator, the very first one I did, I believe, because we compared 22 to 21 in that year. And also consider making available your per pupil amount of funding for all schools for 21, 22, and 23. And that can be pulled right off of your calculator that we did. And then finally, the per pupil number of FTEs for each high poverty school in each LEA for 21, 22, and 23. The per pupil number of FTEs in the aggregate for all schools in the LEA for 21, 22, and 23. And then you want to say whether the LEA did not maintain equity for any high poverty schools in 22 or 23. What we have to do, the South Carolina Department of Education, for transparency, is we have to list the state's high need LEAs. I'll do that on December 31st. Statewide per pupil amount of state funds provided to all LEAs. The per pupil amount of state funds provided to each high need LEA, and I'll pick that up from your calculator as well. And we also have to provide a list of the state's highest poverty LEAs on our website, the per pupil amount of state funding provided for each high poverty LEA, and then a list of the high poverty schools in each LEA in the state for which it must maintain equity. So that, in about 26 minutes, is a brief overview of your LEA level maintenance of equity. I think we did a really good job last year with meeting the exceptions. That made things a lot better and a lot easier. A lot less growing pains last year. The only difference this year is we'll have to report, of course, actual expenditures rather than your revenue projected. So we're about 26 minutes in, and I have some grants accounting things to go through. But what I want to do, check first, are there any questions on your LEA level maintenance of equity requirements?
Stephen, we've just had several people note in the chat that they haven't received the spreadsheet. Is there a specific person at each LEA that would have been on the email list for this, like a CFO?
Sure. We have a listing of finance officers in the districts, and that is the email listing that I use. Are there any finance officers on today? And if so, can you verify that you received it? Just drop it in the chat if you're a finance officer that normally receives our newsletter, et cetera, and if you received this template. So if you did not receive the template and you want to receive it, you're welcome to email me and I'll send it to you, or check with your finance officer at your LEA to make sure they received it and see if they could forward it on to you as well. Good questions. And also, I think, the PowerPoint serves a good purpose, but the actual template kind of adds a little bit of clarity to what you are doing. And I'll see if I can share that real quick. I think I might stop sharing the PowerPoint real quick, if that's okay, Emily, and just see if I can share the template real quick.
Yeah, absolutely.
And that way, if anyone has any questions regarding the template, and make sure I'm seeing the right one. Yeah, okay, that's the template. Does everyone see an Excel spreadsheet in front of them? Okay. You have a number of tabs. Here at the bottom, you have an instructions tab, an exceptions tab, a compliance tab, a 22 fiscal tab, a 23 fiscal tab, a 22 staffing tab, and a 23 staffing tab. The tab that I'm on right now is shows your instructions. And like I said, I try to be fairly concise with my instructions. Just read through those before you get started. And the next tab over is your exceptions tab. Start here because here is listed your first three exceptions. Does your LEA have a total enrollment of less than 1,000 students? If yes, if you click yes here, you don't need to go any further. Does your LEA operate a single school? If you click yes here, there's no need to go any further. Does your LEA serve a single school per grade span? If you click yes here, there's no need to go any further. You can just sign it. You tell me what your LEA is, send it back into Daniel Haven, and you're good. The fourth exception is called the no aggregate reduction exception. What I did a little bit differently this year is I've got 23 and 22 and actual expenditures for state and local funds. So I highlighted Fund 100, include functions 100 through 299, object 100 through 499, all school locations, and exclude functions 5XX, 27X, and object 5XX. So I'm trying to tell you here what to include and what to include in your actual expenditures. There's a calculation here. If you got your total expenditures from state and local funds, it's a formula. And then your latest student count would be your 135 from your previous year at this point in time. Throw that in there. It'll do a calculation for you. And if your per pupil funding in 23 is greater than your per pupil funding in 22, then I didn't do a formula there to give me a green or a red, but if it is, then you've met that fourth exception. Print this off and send it on in. That's as far as you need to go. If you do need to go further, you have a compliance tab. It's already filled with your formulas. And I started with fiscal equity district-wide here. I gave you, I tried to be fairly user-friendly in everything that I did. We have fiscal equity grade span. Again, try to be fairly user-friendly, give you some instructions over here. If you've met, it'll actually turn green and say yes, I think. Staffing equity district-wide, and keep in mind, these pick up, let me just click on a formula here. All these pick up from your tabs, okay? And that's what I mean by, this is a formula that picks up from your FY22 staffing tab, and that is row 13. So this picks up from your staffing tab, your 22 staffing tab, row 13. So whatever your total is there, it picks it up. So I tried to make the formulas pretty easy for you. And then just some examples of your high poverty schools. Keep in mind, you only need to determine what's in your quartile. This one had only 2 in the quartile. And that's your compliance tab. Once you meet, you don't need to go any further. And then your equity, your staffing equity, same thing here. Once you meet staffing equity, you don't need to go any further for your high poverty schools. Your fiscal tabs and your staffing tabs is where you'll actually punch in your numbers and do a sort. And notice here there's some hidden rows. I went to 12, but then I hid down to 102, so you can just unhide those and continue to add schools if necessary. You would add your grade span, elementary, middle, high, however you want to do it. That's a formula. You would add your pupils in poverty information here, your ADM for that school. And once you sort it, you can determine if it's a high poverty school, your total number of schools in the LEA, and divide by 4 is going to give you your quartile. So if that's only 2 schools, then you only have to meet for 2 schools. If your quartile number is for 2 schools, you only have to meet for 2 schools. And that's kind of the way that it works. But hopefully, 95% of you can stop here. Does that make sense to everybody, or does anyone have any questions about the actual template other than not receiving it? You see any other questions, Emily?
I haven't seen any other questions. No.
Okay. Either everybody's just really scared or they don't want to Ask
They're taking it
questions.
all in.
Okay, okay. All right. So if you think of any questions, feel free to still drop them in the chat, and I will share again, and I will share my PowerPoint one more time. So we're getting close to September the 30th. So let's talk a little bit about what's happening with grants accounting, and there are some period of performance coming to an end on September the 30th. So if everybody doesn't know, the reimbursement process is if you enter a claim Monday through Friday, we're going to approve those claims probably pretty much every day, unless a grants accountant is out. Your claims are going to be constantly approved during that week, and we'll approve all the way up to Friday and maybe even some on Monday. But Monday, we will take those claims that we approved and we'll run an interface with SKIS, and then Tuesday we'll do the federal draw, and then finally on Wednesday we'll process your payment. So anything that you entered as a claim and we approved the week prior, you're going to get paid that Wednesday. So that's the way that reimbursement process works. If anyone is new to this process. Some deadlines. These are quarterly deadlines. Keep in mind that the quarterly deadlines are what I like to call soft deadlines. In other words, say your quarter one runs from 7/1 to 9/30. You have a claim due on 11/15. In order to be on time for that claim, you'll have to process that claim by 11/15. But we're not going to shut down the system so that you can't claim it after 11/15. It's a soft deadline. The only thing that could possibly happen after 11/15 is you claim a first quarter claim, and you might get assessed a small risk assessment for filing a late claim. Quarter two, the same thing. Quarter three, the same thing. The only hard deadline is, of course, your quarter four deadline, which you get an opportunity to claim everything that you received by 6/30, but your deadline to claim is 8/15. That is actually a hard deadline. The system will shut down after midnight of 8/15, and you actually have until 12 o'clock, 12:00, not 11:59. I learned that this year. You actually have until 12 o'clock to submit that claim, and the grants accountants will stay up with you. I stay up with you. We're online. We're here for technical assistance that evening. No matter what evening it is, we're all up. But the system will do a hard shutdown after that, so that anything you don't claim by that time is lost. And that's for a number of reasons. We have to do our closing packages here at the South Carolina Department of Education. You have to close your books at an LEA to get ready to do get ready for your audit. And, we just do a hard shutdown so that we can close out that fiscal year. Some grants may require an earlier final claims date, so please just make sure you know what that earlier final claims date is on your GAN. Refer to your GAN. Now, period of performance end date reminder. If your grant is actually coming to an end, and this is for any grant that was active on October 17th, 2022, you will have 90 days after the period of performance end date to receive, pay, and claim goods and/or services obligated by the period of performance end date. A few caveats there. I don't know if I put them in here or not. Travel has to occur by your period of performance end date. So if you've got someone out on 9/29, 9/30, and they're coming back on 10/1, that 10/1 didn't make it. You got to prorate that somehow and move that 10/1 to a different funding source. And also personnel services the person has to have worked by 9/30 or your period of performance end date. But you do have 90 days to obligate and receive, pay, and claim goods and/or services obligated by 9/30. And what that means is goods or services must be paid and claimed based on the date of receipt of goods and/or services. So if you obligate something by 9/30, you have up until 12/30 to receive it, pay, and claim it. If you obligate it, or in other words, encumber it or order it by 9/30, and it comes in on 11/15, then you can actually claim it as a first quarter claim. And if it comes in between 11/15 and 11/30, you would claim it as a second quarter claim. But just keep in mind that there are that shortens your time to receive, pay, and claim the further you get. So your period of performance end date might be September the 30th. Goods or services obligated by September the 30th. Travel must have occurred by the period of performance end. Personnel must have worked by period of performance end. Pay for these must occur prior to the claim, but not necessarily by the period of performance end date. In other words, say you travel on September 30th, it doesn't mean you have to reimburse that person for travel on September 30th, right? It just means they had to have traveled by September 30th. Just make sure you reimburse them before that final claim date. Same thing for personnel services. The person may have worked on 9/30, doesn't mean you have to run it down to payroll and pay it on 9/30. Just make sure that you pay it before that final claims date, which is 90 days out if this is a period of performance end date. So make sure it hits payroll before 12/30 and hits your ledger so that you can claim it. Goods and or services received by September 30th. Again, if it's received by November the 15th, claim it, and it's a first quarter claim. If you claim it by November the 15th, received between November the 15th and December 30th as a second quarter claim. You should be aware that the grant closes on the 90th day. So this shortens your time to receive. So what I mean by that is, you may order something and obligate it on September the 30th, but if it doesn't come in until 12/30, then you've got to be a superhero and make sure you get that invoice from your vendor. Make sure you get it to AP to be paid. Make sure it's on your ledger. Make sure you claim it on 12/30. So that's how it shortens your 45-day normal claiming window that you're normally used to. So you really got to be on point with these new rules. Make sure you get your invoices in, because if you don't get your invoice in and you can't pay it, and that grant's going to close on the 90th day, and you're going to lose your opportunity to claim it. So just be on point with that. And, make sure you're talking to your AP people and make sure they understand that there may be some rush there. Also be aware that there might be some off-cycle final claim dates. What I mean by that is that if your final claim dates, they're not always going to fall on the 45th day after the close of the quarter, because of the period of performance end date. It might dictate a different date. So refer your GAN and or your final report date, which is reflected in GAPS, in order to make sure that you don't miss that final claim date. Very important. So on your GANs, you'll notice some new language for indirect cost rate changes, and it reads something like this. This is for federal subawards only. It reads, the negotiated indirect cost rate or the indirect cost allocation plan approved for the subgrantee applies to this subaward. What that means is if you have a 27-month grant and the indirect cost rate that's reflected on your GAN when you first get that GAN doesn't necessarily apply once your indirect cost rate changes. You may change your indirect cost rate if it changes, and make sure you pull in your full indirect cost, or if it reduces, then you reduce the amount that you're pulling in for indirect cost. And that's modeled after the federal awards to your agency. It just means apply your approved indirect cost rate for the current year, because as you know, your indirect cost rate could change every year. And that's just to prevent amendments to subawards to your GANs, to make things easier, to keep you from having to sign so many things and to keep up with so many GANs. So amendments and new budget deadlines for all grants expenditures that will be incurred on or before June 30th, 2024. It's hard to believe we're talking about that already. Should be entered into GAPS into GAPS by June 30th, 2024. So if it's entered into GAPS, unless there's an earlier deadline referenced on the GAN, if your amendment or new budget is entered into GAPS, you're okay. You just have to make sure that on your title grants, if there's some title grants, that your GEMS date, it's entered into GEMS and into GAPS at the same time. But we may not approve it on June 30th, but as long as it's entered, you're good. So just keep in mind, no amendments will be allowed in GAPS from July 1st through August the 15th, because we're trying to clean up that queue and get ready for final claims at that point in time. So amendments for expenditures in FY25, new budgets for expenditures occurring on July 1st, 2024 or after can be entered into GAPS beginning August the 16th. That's the day after final claims day. So we can't enter anything during that cusp of time from July 1 to August 15th as far as amendments or new budgets. Just prepare for that. Final claims deadline, always August the 15th, always. And we can't move that date, and we can't open back up if you miss that deadline. So just please keep that in mind. Keep an eye on your reports, and I'll show you some of those reports in just a moment. Once we go into FY25, first quarter claims will not be allowed until after August 15th. So if you have a first quarter claim, you can't enter it until August the 16th. So you need to monitor your budgets, amendments, claims. There's a couple of ways to do that. I think your budget summary and budget detail reports are good. Your expenditure summary and expenditure detail reports are very good. And here's some examples. In red, this is a budget detail report. You will see that there's an amendment. That means there's the red yes is an amendment for 21 Title I, and it's been submitted to subrecipient finance. So it hasn't made it out of the district yet. So just make sure you keep an eye on that report. You want to make sure it makes it to SCDE program if it's an amendment. And it also shows a net budget balance. So on your 20 Title II, there's $4,000 that has not been claimed yet. There's $10,800 on your Title IV, and there's a little over $6,000 on your 21 Title I regular that has not been claimed yet. There's a budget summary report, and it will show if you have an unbudgeted amount. That unbudgeted amount over in the third column from the left will not let you claim. So make sure that if you have an additional allocation that your program office gave to you, that you make sure you budget that as quickly as possible so you're not eclipsed on your claiming. You have a budget pending column, which we can't tell from this budget summary report what that means. We don't know where it's pending, in other words. We don't know if it's pending at the LEA or at the SCDE finance, but you can drill down into GAPS to find out what the status of that is. And if it's at the SCDE and it's been here for a while, call the program office, remind them. And you also have $8,768.82 expenditure pending. Again, we don't know what's happened with that. We don't know if it's already been submitted to us and it's just waiting on us to approve it, or we don't know if it's still sitting there at the LEA waiting for someone there to do something with it. But that's just the summary report. You can go into the detail report and find out a little bit more. You can find out that there's a grant or an expenditure for $60,000 is waiting with the finance approver. Has not been submitted to SCDE yet. So just watch those reports. Make sure that you do not leave the office on August the 15th until you've checked these reports to make sure everything's been submitted. It's highly important. Happens every year. Someone leaves something out there, sometimes it's small amounts, sometimes it's large amounts, but somebody forgets to submit something and we can't pay it after August 15th. So just make sure you're using these reports and running these reports. Also, make sure your SAM.gov is updated because we can't pay federal claims. We check these every Monday. If your SAM.gov is expired, we won't release your claims that you may have claimed. Make sure that that's up to date. Check that. And that leaves us a few minutes for questions. So I think I timed that pretty good. Any questions about either MO Equity or grants accounting, the way things work with grants accounting?
And if anyone has questions that would be easier to unmute for, if you just raise your hand, I can give you your microphone to ask the question as well.
No one has any questions?
I know, I'm shocked. We had so many last year.
I'm disappointed. Come on, guys. That either means I'm really, really boring and you didn't pay attention, or you know everything already. You probably just know everything already, right?
I think your presentation was just so thorough that they got it all.
Okay, well, we'll choose to believe that. We'll choose to believe.
Well,
But as
Stephen,
always,
I'm
yeah,
not
I'm
sure
sorry.
how you want to handle the amount of people saying that they haven't received the spreadsheet, but I just wanted to offer,
Mhm.
if you need the attendance report from this meeting, I have the emails of the people in that as well.
Sure, if you can share that with me, I'll make sure they get the template.
Okay, great. Thank
I
you.
just emailed it out this morning, and I'll double check. You know, of course, my drafts just to make sure it didn't get hung up in drafts either. So, but I'll do that. But if you can share the attendance report, I'll make sure that anyone who needs that template gets that template.
Great. Thank you so much, Stephen.
You are welcome. Y'all are welcome. As always, reach out to me if you have any questions.
And just really quick before we go, everyone, the registration for tomorrow is still open. And those are linked on our website, which I'm going to drop in the chat one more time here. Tomorrow's session is going to start at 9 a.m. Today we started at 8:30, but tomorrow we will start at 9 o'clock, and we will kick off with Brittany Davis and Melissa Myers from our Office of Auditing Services. And as always, if you have any questions, please feel free to reach out to scsr@ed.sc.gov. Thank you so much, everybody.
Thank you, Emily.
Thank you, Stephen.